It is going to be the start of the new year, which means that we are also approaching the end of the financial year. And it means it's time to start filing our taxes if we want to avoid that last-minute rush and miss out on all the deductions and the exemptions. But if you're a first-time tax filer, then don't worry, we've got you covered. On the show today on India Tonight, we're looking at the new tax regime versus the old one. And we'll help you figure out which one is the best for you, give you all the tips that you need to save taxes legally. And to discuss this, we have Mr. T.P. Oswal joining us. He's an international tax expert. Mr. Oswal, always good to connect with you and get your insights when we are considering matters related to taxes and tax saving. Mr. Oswal, do tell us, because it is that time of the year when many have this trepidation in their heart on how to save taxes, how do you recommend we go about approaching the subject in today's context?
You see, as far as employees are concerned, they have to make a declaration on what deductions they want to claim, what are the incentives they are going to use for the purpose of claiming from their income tax during the year, because and that has to be disclosed to the employer in advance, so that employer takes into account those deductions and deduct the lower rate of tax or lower tax from your total estimated income. It is now responsibility of the employees to keep all evidences. Now it is no more responsibility of the employer to keep the evidences of what deductions you have claimed. And therefore, it is necessary for you to file a particular form. I suppose if I'm not mistaken, it is Form 12BB with the employer giving the details as to what deductions deduction you want to claim. There are various deductions which are available to you. For example, under Section 80C, you pay premium for the LIC or PPF, ELSS scheme, or if you pay premium for annuity under 80CC, 80DD, all these sections which are governed under Chapter 6 of the Income Tax Act gives you various incentives, and that you can avail in advance by giving declaration. So this is the next quarter will be your obligation. And at the end of the year, you should review yourself whether you have fulfill the conditions which are required to be fulfilled to claim the deduction. If you are not, then tell your employer, revise it accordingly, and he will deduct appropriate tax accordingly.
The old tax regime and the new one, what are the changes that you would highlight for us, especially when it comes to those deductions and the exemptions that are allowed?
Well, there are no major changes which have taken place in income tax for claiming deductions and the exemptions. Income Tax Act, but possibly next year it will possibly impact. For example, interest on home loan, which is available, a deduction is available up to a particular 2 lakhs of rupees. Then when you are paying rent to the employer, you need to rent to the landlord. You need to obtain certain details, receipts you have to obtain from the employer. The landlord. And you have to deduct tax at source in case if it is required. If the rent is in excess of rupees 1 lakh, you must obtain PAN number from that landlord. So and rent receipt must be obtained. And all these details must be fulfilled. If you are giving the receipt, if the landlord is giving you the receipt, ensure that you fix the revenue stamp on that, because revenue stamp is an acknowledgement. And that is how you ensure the receipt is a valid receipt. So if all these conditions are claimed, and for another exemption or deduction is leave travel concession. Twice in a block of 4 years, you get leave travel concession, and that also for which you have to keep necessary evidences of your having traveled by the lowest, shortest possible route within the country, and the mode of travel, and all the details, tickets, etc. If you keep it, you may have to submit it to the assessing officer at the time of your assessment, if you are called upon to submit. But it is now no more responsibility of the employer to keep all the evidences.
Mr. Oswal, there are reports that the government is not satisfied with the uptake of the new tax regime. So do you expect any changes on that front?
Well, changes are, in our country, changes are imminent, and they are bound to be there. Because, for example, now government has come out with an simplified, they say simplified annual, the annual return which we file. there are 7 type of tax filers filing different forms of return, form number 1 to form number 7. But 1 to 6 forms have been consolidated into one form, and they have notified draft form. But my personal opinion is, if the changes in the laws are made, it becomes more and more complicated for the taxpayer to and even tax consultant to file the tax return of a taxpayer. The government says we want to follow internationally best practices, but I doubt whether if you want to follow international best practices, you should also follow the practices in terms of framing your policy and changing the laws, which is not happening. And if that happens, if the and I'm quite sure with this government that can also happen sooner than later. But if that happens, it will be all right. In budget, ensuring budget which we are expecting, you can expect some changes. But as far as salaried class of employees, I don't see any major changes going to happen so quickly and so easily. Possibly the government of India should now reduce the rate of tax on a very high tax, highly paid taxpayers, which now today, if a person has got an income beyond 5 crores, there's no incentive for him to earn so much of income, because 42.7% of income he pays tax to the government, which is very high.
So then, Mr. Oswal, in that context, since we are talking about the high amount of taxes that one ends up paying, if you have to tell our first-time tax filers as well, when it comes to tax-saving instruments, which would you say are the most efficient right now, which would help you save taxes, not just efficiently, but simply too?
If you want to save the taxes, the simplification measure is very simple. The life insurance premium and the investment into ELSS, that is the mutual funds, etc., the certain type of mutual fund, PPF and NPS, National Pension Scheme. And these are the most easy way to get the deduction, because generally my experience is everybody has a PPF account, Public Provident Fund account. And in that account, you can invest up to 1,50,000. Even if suppose, and the interest on this PPF account is totally exempted. And therefore, there is a absolutely good attraction. 8.5% interest you won't get anywhere. And that is tax exempt. So that is the best way of investing. Otherwise, if you say I am contributing for medical expenses, I am paying premium on medical insurance is deductible, which is also necessity of the country, necessity of human being here in India. Educational loan, if you have taken interest, is deductible, that you get a deduction. And in case if you have got still more income and you are little charitable, give some donation before the tax is paid, you can get deduction under Section 80G. These are the major deductions. And of course, interest on saving bank up to 10,000 rupees, you will get deduction. And these are automatic. You don't have to do anything if you have got some saving in saving bank account. But I don't think anybody should keep the balance in saving bank account, because interest on that will be very nominal.
Right.
You will generally put the money into the fixed deposit.
Right. Mr. Oswal, like I started out by saying, talking to you always helps ease the process of filing tax returns. And of course, when it comes to saving taxes, we look upon you for advice. Thanks very much. You've done exactly that for us tonight as well. Many thanks for joining us.
Thank you.